This tutorial is a project of nonprofitaccountingbasics.org, a free resource developed by the Greater Washington Society of CPAs Educational Foundation.
Hi, I'm Dennis Gogarty, and I'm the president of Rafa Wealth Management. My firm is an independent registered investment advisor, serving as the advisor for more than $500 million in assets, including the reserve portfolios for 66 distinct nonprofit organizations. The questions that I'm most frequently asked by our nonprofit clients are, of course, how do other nonprofits invest, and how do other nonprofits' investments perform? It has become clear to me that while nonprofits plan every fiscal move with great caution, backed up with thorough analysis, when it comes time to plan their investment policies and gauge their investment performance, they operate in a silo without access to any information about how their peers, other nonprofit finance executives, manage their reserves and perform on their investments. So, in 2012, I developed the peer benchmarking study on nonprofit investing because nonprofits deserve to know. What is SONI? Now in its fourth consecutive year, the study on nonprofit investing, SONI, is bringing transparency and accountability to nonprofit investing. So far in 2016, more than 700 nonprofit finance executives have participated in SONI. Participation involves completing a short survey about the organization's investments and investment policies, and participants receive the SONI analysis report at no cost. Why participate in SONI? The SONI report provides peer benchmarks that enable nonprofits to make more informed decisions about their investments. SONI answers questions like, how do nonprofits segment total cash among short and longer term objectives? How much risk do nonprofits take with their longer term investments? How much do nonprofits pay for investment services? How much are nonprofits earning from their investments, and what should they expect? And what can I do to strengthen my investment policies and procedures? Findings. Last year's report revealed significant challenges in performance, a lack of transparency around investment fees, and that many nonprofit investment policies are missing the critical guidelines necessary to direct decision-making and force accountability. For example, many nonprofits don't include diversification requirements or outline portfolio benchmarks in their investment policies. And many don't indicate who ultimately has authority, discretion, to make decisions about the investments. These challenges make it difficult to make informed decisions about investments, and I believe that strengthening policies and forcing transparency and accountability will lead to better results. Will the 2016 report reflect improvement? Well, we'll know soon. How do nonprofits invest? On the plus side, SONI has revealed a lot about how nonprofits invest. Nonprofits, for example, typically structure reserve policies based on the timing of various expenses and investments. Many nonprofits develop multiple fund pools, such as operating, short-term and long-term, that correspond to the timing of various financial objectives. The key is balancing the liquidity needed to meet current and near-term obligations while maintaining the purchasing power of funds intended to meet strategic objectives that may not occur for many years, if at all. We also know that shorter-term or operating reserves are typically invested in cash, CDs, or mutual funds that invest in high-quality short-term bonds. Excess funds allocated to longer-term reserves are typically invested in a balanced portfolio of stocks and bonds with specific targets to each based on cash flow expectations and risk tolerance. The primary factors leading to either a more conservative or more growth-oriented long-term strategy are the size of the organization, the amount of experience or length of time that an organization has maintained a long-term portfolio, the certainty or reliability of revenue, and tolerance for volatility. Fiduciary responsibility. As it relates to investment reserves, the nonprofit fiduciary must make certain that the organization's reserve and investment policies continuously reflect the changing needs and goals of the organization. Another key role for nonprofit boards or a sub-finance or investment committee is to effectively oversee the management of their assets. This means verifying that investments are compliant with policies and performing within an acceptable range based on market conditions. The Sony report helps nonprofits know if they're making prudent use of their cash assets, if their policies can be strengthened, if their investment performance is in line with expectation, and if their investment fees are reasonable. I hope you agree that nonprofits deserve to know. Next steps. Please consider participating in the annual study on nonprofit investing. You can register by sending your contact information to sony@rafflewealth.com. Please also feel free to share feedback or best practice or ask questions. You may also visit www.npinvesting.org to review last year's executive summary and other key findings. You may also order a custom report by sending an email to sony@rafflewealth.com. Custom reports are typically a board book insert comparing your investment policy, fees, and performance to a relevant cohort in the study. Results are segmented by nonprofit size and type. Thank you for considering participating in this important project. Don't hesitate to reach out to me directly with any questions. Nonprofits deserve to know.